Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, December 19th. Wanted to look at three charts today. I wanted to look at some early clues to the rally in crude oil, some early clues to the rally in the euro, and then some early clues to the moderate sell-off that we had in the emini S&P today. So let's jump right into it here. I've got the crude oil chart here, and we're looking at a 2-minute chart. Again, this would apply to any time frame. Just happen to be looking at the 2-minute here. And so, we know that on Wednesdays in the crude oil around 10:30 Eastern time, there's a report. So we know more often than not we're going to get a pretty major move. And so it's obviously important if you trade crude to be able to stay on the right side of that move, or else you can get your head ripped off. But it's also a great opportunity if you do have some good evidence that you're on the right side of things. So if we kind of look back here into yesterday, there wasn't much activity yesterday, but you can see that our filter early on was green early in the day. Even on the lows of the day yesterday, we bounced off of the support zone really nicely in the dark green filter. We opened the day, we continued over. So we have a bullish lean, at least short term, heading into the day. But we want to really monitor, on Wednesdays, the crude oil, the first major structure of the day. And you can see that right at 10:30, our first major structure of the day was this level 3 or extreme buying aggression bar. And when you have that, certainly you can take a breakout trade and just go with it, but whenever there's news, you want to kind of see whether there is rejection or the follow through, at least on that first major structure, to give you a little bit more confirmation. So we want to ask ourselves, can this low hold? First of all, we would expect that to be a support zone, or does the high get taken out and do we continue on higher? And obviously in this case, we didn't quite get to the low of the bar, and then we took out the high on a level 2 buying aggression bar. And that's our first clue, a pretty solid clue that with this news event, the market is at least poised to rally short term. It's pretty safe to be on board the long side. There's a lot of different ways you can get into the market, but that's certainly kind of the first thing that we look at, is try to be able to help ourselves determine the most likely short-term direction of the market. So you can see that, and you can see that as we get these major structures, we keep getting follow-through. It's not until this bar right here, this level 3 selling aggression bar that does not have follow-through anymore, that has rejection instead, that it doesn't mean that the market's going to sell off. It simply means this pure wave of buying, there is some evidence that it's over. So, if you were in this trade to get long, it's a potential sign that you want to at least scale out of the majority of the position or get out of your position. You were able to capture that nice vertical move starting here or somewhere in this area here, the strong pure vertical move is over. Again, it doesn't mean that because we see these selling bars come in, these are level 2 selling bars, and you see we have these wave of level 3, which we'd consider stronger buying bars. Okay. Now, another way, if you're looking after this vertical move has ended, at least the pure buying vertical move, one of the trades that we like to talk about in terms of a kind of a retracement or a pullback type of a trade within a trend is what we call our sweet spot trade. And whenever you have a situation where 2 or 3 of these level 3 bars overlap, you can see we have 2 in a row right here, and they overlap right here. That's kind of the sweet spot. So, getting on board a trade in that area can be a pretty nice opportunity as well. So just wanted to point this out in terms of the crude oil that are around this 10:30 report. The first major structure gives us a lot of information, and so that's certainly a way that you can at least keep yourself on the right side of the market and keep yourself out of troublesome situations as well. I want to look at a similar scenario on the euro here, so let me bring that chart up. Here is a euro chart. Let me scroll back a little bit. This is basically starting around 2 a.m. Eastern time, so certainly during the European morning time at that time. And so, early on in the day, you can see that even as we're on the lows of the day, the order flow is telling us that some buying is starting to come into the market. So that's our first clue. And then our first major structure is this level 2 selling bar, or a strong selling aggression bar. And so we want to ask ourselves, again, especially with this first structure, do we have follow-through or do we have rejection? And you can see that we bounce in there for the good part of 40-45 minutes before we do confirm that we've had rejection above. So again, that's kind of our second clue that bulls are at least in the short term in control. Then we have another level 2 buying aggression bar. The low holds, we have follow through, and then we get this support resistance zone in here right here. And so obviously a pretty good scenario for getting into a trade with good structure. The first structure of the day was bullish. Our filter's bullish. We've got a green support zone. So, you know, being a buyer in this area doesn't mean it's going to guarantee that it's going to be a good trade, but it certainly gives you a pretty good edge on the trade. That was also confirmed then when we had this attempt by sellers, this level 3 selling aggression bar, and you can see it's right into a support zone, had no follow through at all below. The high was taken out shortly thereafter. We certainly, you know, tested within, tested within that bar for quite a bit of time, but you can see there was no activity below the bar, and we were getting activity above the bar, which fits the context that we'd seen so far with our filter and with the structure we'd seen so far in the day. Okay, so again, a lot of clues that bulls are in control at this point. Then you can see as we make new highs, we do so on this high velocity move and this level 3 buying aggression bar. So at this point, it's kind of all signs, and our filter is turned over to strongly bullish. So at this point, it's kind of all signs are go, and this market looks to be rallying. Whether you get them with our breakout trade or you wait for some kind of a pullback, which this market was so strong, we didn't get a pullback to the lows of any of these level 3 bars. But again, you were seeing some pretty good evidence that starting early on in the day that the bulls were pretty clearly in control of this market. So that's certainly interesting to look at in terms of the euro. And again, this was a 2-minute chart. The same logic would apply for any time frame, up to a swing trading type of a chart as well. The same very same logic applies. Okay, let's look at the 2-minute of the ES today as well. Just to, not quite as strong of a move, but there was some opportunity certainly in the ES. And this again is a 2-minute chart. Let me go ahead and take off the level 1 bar so we can just look at the level 2 and level 3 bars. So I'll just go to my indicators there and go to level 2 and 3 only. And this cleans the chart up a little bit better. Now, heading into the day, our bias was certainly up. So this was one of those mixed or contradictory type of a days where you either want to decide if you are more of a bigger picture, longer term trader, in which case you'd be looking for long setups, which you didn't really have many good opportunities today, or if you are more focused on the short term, where you're looking at what the short term structure is telling you so that you try to stay. Today, we would look to stay on more of the short side. You can see that after we opened a few minutes in, our first major structure is this level 2 selling aggression bar. So again, we ask ourselves, especially on this first structure, can that high hold? Do we get follow through, or do we get rejection? And you can see that the high held beautifully. It even decelerated as we tested that high. Then we took out the low. We had a buying bar that here got rejected. So at this point, from around 43 or 42 until around 37, about a 5-point move, it's clear that the bears are pretty well in control of the market. Now, when this level 3 selling aggression bar gets rejected, it's our clue certainly that this at least extreme wave of selling, or this totally what am I trying to say? This bearish vertical move is, at least from a pure standpoint, is over. It doesn't mean bulls have taken over. It just means that the purely bearish move has been rejected. And so there's contradictory or two-sided evidence at that point when this bar gets rejected. If this bar would have had follow-through, we would have just considered ourselves that the bears were still firmly in control, and you would certainly not want to fight that. Hopefully that makes sense. I apologize for stuttering about that. Okay, so we have a bit of a wave here. Until we were able to take out this resistance, however, you've got to at least be thinking in this first major structure, you've got to at least be thinking you want to be nimble. It's not that you don't want to just get on board. You can see that our filter is neutral. You don't want to just get on board in any type of a long trade at that point. Now, when this resistance zone is not quite even tested, and then we have some decelerations, and we had this level 3 selling aggression bar that the high held beautifully a couple times, that's a pretty good sign that, at least on the short-term basis, bears are in control. And you can see that we continue on lower. We have one attempted move higher, but again, it peters out at this resistance zone where it decelerates as well. And then we close with a pretty nice sell-off. So, not as exciting of a day in the ES, but certainly some good evidence early on that at least early on that the sellers were in control. We couldn't really get any great follow-through from buyers. You could see that basically every time we had some buying structure, we had some a tough time following through. And our major structure here by the sellers could not get taken out. The high could not get taken out. So hopefully that makes sense. I apologize for kind of flailing on that ES demonstration. But the main thing I want to talk about was the crude oil report, and then the nice rally in the euro as well, and how you can kind of make sense of that early evidence. Again, as you can with the ES as well. So if you have any questions about that, let us know. And otherwise, have a great Thursday and good day of trading. We'll talk to you soon. Thanks.